I mean, the way I'm looking at it is that, we can use different kind of on-chain indicators and basic, sentiment analysis to see how it's going. And for a while, it was kind of on track where the bull market looked a lot like the 2017 post-halving bull market. And so now it's starting to look a little bit more like the 2013 bull market, where it had a longer correction in the middle there. It had like a 6 month, a pretty significant correction. But it's interesting so far because it's kind of a hybrid. And so in terms of percent loss, so far it doesn't really deviate from the 2017, bull market at all. So some of those corrections were down, in the high 30% range, close to 40% in some cases. None of them lasted this kind of 3 month period that we're seeing now. And so in that way, it's looking a little bit more like the 2013 period. And so I'm kind of analyzing it like I do any other asset class. And so, for example, in my research service, I cover multiple different asset classes. And generally what you see is that if everybody kind of, within an industry gets kind of super bullish at the same time, that's when you're likely to have kind of pullbacks and corrections and things like that. And so I think now we're seeing that. I saw a similar thing with gold last year, where after the initial, kind of CARES Act fiscal stimulus, we saw, of course, the big run up in gold. But then when you got to kind of late summer of 2020, you started to get a real rates kind of rising a little bit off of their lows. You started to get a rollover in gold sentiment, right? And so you were in kind of a long-term gold, kind of an 8 month correction. And just when everybody kind of thought it was dead, that's of course when it kind of bottoms a little bit and shows some life. And so we kind of see similar things with Bitcoin, where it's on, they're on different clocks, right? So when while gold was correcting that time and it kind of kind of being harmed by that rising real rate phenomenon, Bitcoin was doing better. And so now it's rolling over a little bit. We have some of the people that, for example, have been avoiding it this whole time, now doing victory laps because it went down 30 some percent, kind of ignoring the fact that it went up hundreds of percent in the cycle. And so, it's hard to say whether or not this has been the bottom or if we're going to see a deeper correction later. But so far that, the overall network effects are still in place. It's just that if you look across the board at sentiment, you had pretty strong sentiment in Bitcoin, and then you had really bubbly sentiment in the broader, the crypto space, where you had Ethereum Classic outperforming Ethereum. You had Dogecoin, going to the moon. You had, people are inventing, new coins called Cum Rocket and things like that. And so, when you get to that phase, you start to get a really kind of dilutive effect in the industry, where a lot of the enthusiasm that might otherwise be for Bitcoin starts spreading out. And we start to get kind of this temporary issue where like Bitcoin scarcity stops mattering because everyone can just issue more coins and people can pile into more coins. It's kind of a similar thing you see at the top of equity bull markets, or at least local tops, I should say, where if there's a crazy demand for equities, all sorts of crappy companies can issue equity and give as much equity as people want. And it's not until you kind of clear some of that out that you see which companies actually, their equity is really worth something.
So considering we still have many altcoins outperforming Bitcoin, is your opinion that there's still more selling to go from where we're at right now? And just for people, I think we're around 44,000 right now. Based on what you're saying, it sounds to me like you think that there's a little bit more selling to happen.
I don't have a strong opinion either way. I mean, I think, we haven't seen some crazy capitulation where just, we're kind of like a death spike. But we've seen a pretty prolonged down move. And so I'm kind of at the point now where I'm not getting very clear intermediate term price signals. And so I don't, I try to do the thing where if I have conviction about something, I'll say it. And if I don't know something, I'll say I don't know. And so in terms of the next 3 months or so, I don't have a firm opinion either way about Bitcoin's move. I remain basically strategically bullish while being pretty agnostic about near-term price action at this time.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
So the one thing that Elon brought up is he was talking about miners in China and how this is a centralized thing. So, Lyn, I'm sure you can crank this one out of the ballpark as to addressing how this is FUD.
Yeah, there's a couple. I mean, there's one is the energy FUD and one is the centralization FUD, and they're two different ones. And so basically with the centralization, we saw from the 2017, the differences of opinion there between, different parts of the community, that, as the ways Bitcoin's designed is that really the nodes have the power. And so the centralization, the partial centralization of hash rate is not really the key factor there. It's really about, is there a central development team that can kind of override, miners and nodes? No. Is there, basically a cabal of miners that can push changes through? No. It's really about the decentralized node network itself. And that's also why the Bitcoin community is so adamant about keeping nodes simple to run, so that the average person can verify the entire blockchain and basically be involved in the consensus, over time. And so miners, of course, have a large role, but just because one country has majority of hash rate doesn't necessarily give them control over the blockchain. And then the second one is the energy FUD, and that's there's pros and cons there. There's parts of things that are merit. Right, so there is a big mining area in China. Some of it is, the hydroelectric overcapacity, where they go there. That's basically the cleanest, freest energy you're going to get, because they're really tapping into renewable energy, but otherwise be wasted because it's overbuilt, in certain areas, especially during the wet season. But the other factor is you do have provinces in China that are more coal heavy. And so, that is a fact. But then over time, especially because China's actually moved in some ways to try to discourage mining in those jurisdictions. A lot of Bitcoin proponents are in favor of, trying to do actions to decentralize the mining a little bit more, bring it more towards North America, bring it to cleaner resources where possible. But overall, it's one of those things where the way it currently works, I think there's a couple issues. One is people assume that the energy consumption is going to be as exponential as the price increases, but the way that the block subsidy halving works, that's not how it goes in practice, where the energy scales better than the price action over time. So there's that, and then two, just the fact that even though you have individual cases where, say, a bunch of coal kind of mines Bitcoin, the overall structure of how Bitcoin works is that it's really optimized to go around the world and kind of soak up wasted energy and basically overbuilt energy. And so the overall kind of, big structure of the type of energy that Bitcoin uses is really a net positive. And it's the fact that, a lot of people criticizing Bitcoin's energy use, they kind of start with the kind of axiom that Bitcoin's useless and therefore energy spent on it is a waste. Whereas, for example, we don't really question energy spent on washing machines or Christmas lights or whatever the case may be, because we know that there's varying degrees of use for them. And so people that really know how Bitcoin works and know why it's valuable, they know that one, the energy spent is worthwhile, and two, that basically that over the long run, that basically the incentive structure is actually pretty attractive for energy, rather than this giant kind of exponentially increasing environmental drain.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members, where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.